Welcome back to the channel, everyone. Today I want to talk about how there's been tons and tons of insider collusion in both AMC and GameStop. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, you may have seen recently that Ryan Cohen fired off 2 tweets about some of the largest consulting groups in the world. He tweeted saying the overpriced consultants at BCG are picking a fight with the wrong company, and the only ones more useless than overpriced consultants are those who hire them. So you may ask, Tom, why is it that Ryan Cohen is getting so annoyed with BCG or Boston Consulting Group and the services that they've provided? Rizzo tweeted saying Ryan Cohen called BCG heavily overrated. They tried to extort $30 million in consultation fees when the GameStop shares had fallen to $3.32 per share by August 2019 from a previous high of $55 per share. BCG's counterfiling in the US District Court of Delaware obviously did not mention any of those large short positions that are currently going on against GameStop, which caused the stock to drop massively. And here is that recent article that says the Boston Consulting Group sues GameStop claiming $30 million in unpaid fees. This is the meme stock company refused to pay significant amounts for help on transformation. Wasn't really much of a transformation considering the GameStop stock dropped from $55 per share all the way down to $3.30 and nearly destroyed the company. This is the consulting group said in a complaint filed in US federal court that it began working with GameStop in 2019 to help enable a corporate transformation that would improve its flagging fortunes. But obviously the retailer failed to take actions necessary to implement the turnaround plan and then refused to pay significant amounts of BCG's fees. Because obviously it wasn't BCG Boston Consulting Group that saved GameStop and the stock, it was obviously the retail investors that saved the stock and Ryan Cohen that saved the company. Very, very similarly to Adam Aaron and us, the AMC apes. GameStop commented saying, "We do not believe it's in our stockholders' best interest to pay the tens of millions of dollars sought by BCG, especially given their seemingly meager impact on the company's bottom line. We will fight this suit and are proud that GameStop no longer utilizes the likes of BCG for any services." You may say, okay, Tom, number 1, how does that involve AMC? And number 2, how does that involve insider collusion to short AMC and GameStop? Carlos Trey's tweeted saying, "Tell me how GameStop, AMC, Bed Bath & Beyond, kohrs, Nokia and BlackBerry have all had an ex-Boston consultancy group working with them as strategy. All of these meme stocks either had somebody or currently have somebody that used to work at the Boston Consultancy Group, physically employed at their company, providing strategy advice." And he says, given BCG's disturbing ties with Citadel, which obviously we're going to get onto a little later, maybe this is how Citadel got a lot of information to enact their shorting schemes. Coincidence? I think not. Joey pointed out that BCG was the consultant for Toys R Us and Blockbuster before those companies went into bankruptcy, and said many employees of yours are also sat on the board of Sears and other wonderful companies that also went bankrupt as well. He said it must say a lot about your track record, and no wonder GameStop doesn't want to pay you. So it seems very, very interesting that one of the largest consultancy groups in the world is behind some of the most major bankrupts over the last 20 to 30 years. And you can see from this screenshot here, there's many current employees of Citadel Securities that used to work for Boston Consulting Group. Master of Meh tweeted saying, "So, BCG are recruited by Citadel Securities to drive companies into the ground while Citadel shorts the stock to make billions." He says, "Don't believe me? Check out this list," and then tagged the SEC and said it's about time you started to pay attention to what's currently going on. Apparently Exempt literally gave the step-by-step play for the BCG and Citadel partnership. He says, step 1, BCG is appointed and goes inside the company. Step 2, BCG makes it to the board. He said, step 3, Citadel open their short position to try and drive that company's stock price into oblivion. Step 4, BCG helps Citadel by enacting bad business practices to purposefully ruin the company financially. Step number 4.5, somewhere in the middle here, is obviously Citadel adds to their short position and starts crushing the company's stock price into the ground. And step number 5, the company gets delisted and goes bankrupt. Now that happens after the stock price falls below $1 per share due to all the Citadel shorting, and after the company goes bankrupt after that terrible BCG advice. When the target company implements those practices suggested by BCG, which are actually terrible business decisions, but obviously the CEO and the board of directors listen because BCG are one of the largest consulting groups and consulting companies in the world. And that terrible, terrible advice ends up declining the bottom line and the top line even further until eventually the company runs out of cash and ends up bankrupt. Number 6, obviously Citadel wins their short bet. They make billions and billions of dollars in the process, and they never have to cover their short position because the company is delisted, and therefore never pay tax on any profits because they never actually realise those profits. And again, if you didn't already know, you may ask, Tom, what's the point in having tons and tons of money in unrealised profits? How does that benefit Citadel whatsoever? Obviously, Citadel can draw on those unrealised profits by taking loans from other large banks and using those unrealised profits as security. In exactly the same way that you can draw on any available equity in your home by taking out another mortgage on your property or by increasing the size of your current mortgage on the property, Citadel can do the exact same thing with their unrealised profits. Now obviously BCG and Citadel tried to implement this tactic on GameStop and most likely AMC as well, but obviously Ryan Cohen and Adam Aaron outsmarted BCG. They outsmarted BCG by listening to the retail investors, aka their customers. Instead of taking advice from BCG, one of the largest consulting groups in the world, they took advice directly from their customers and shareholders. Now guys, many of you may not have a lot of confidence in the stock market at the moment. There's all of this market manipulation, market fraud that seems to be going entirely unpunished. And that's why I've personally been investing in cryptocurrency, especially during this big dip. With BlockFi, you can not only invest in crypto, but you can also get up to $250 in free Bitcoin just for signing up using the link in the description below and making your first deposit. More than 500,000 people and 350 institutions globally use BlockFi to manage over $10 billion in assets. BlockFi is also entirely free to use and requires no minimum balance. BlockFi also offers a rewards credit card with an introductory rate of 3.5% cash back on your purchases, also paid in crypto, so you can continue to accumulate more and more. There's also no annual fees and no foreign transaction fee, and the card is currently available in the US. So guys, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. And it could potentially run even deeper than that. Beachfront Prod suggests that somebody is currently on GameStop and AMC's board of directors that has ties to hedge funds and BCG that actually suggests that BCG perform the consulting. Now you may say, whoa, hang on Tom, who currently works at AMC on the board of directors that may have ties to BCG or other large consulting groups? Well, believe it or not, Elizabeth Frank, the Executive Vice President of Programming and Chief Content Officer, actually used to work as a partner at McKinsey & Company for 9 years before joining AMC. McKinsey & Company is obviously one of the largest consulting groups as well, basically the same size as BCG, the Boston Consulting Group. And therefore it's actually very, very viable that there's people still currently employed at AMC and GameStop, still on the board of directors, that have ties to BCG. Carrying on, it says BCG had no interest in actually improving GameStop and AMC, and instead was there to facilitate the decline into bankruptcy. This became evident to Ryan Cohen, Adam Aaron, and many others, and the turnaround was implemented, including a purge of many board members. And the short positions that this hedge fund, aka Citadel, actually took for their next sure thing or their next easy play ended up becoming entirely screwed. It was always supposed to be a controlled slow burn into bankruptcy, so the shorts didn't actually ever have to cover. But obviously the one thing that BCG and Citadel didn't count on is the fact that Ryan Cohen and Adam Aaron outsmarted the BCG and listened to the retail investors. I think that due to this massive connection between Citadel and BCG, it's very, very likely that BCG passed on tons and tons of insider information directly to Citadel to help enable their short position. Now you may say, okay, Tom, that sounds very, very far-fetched. How do you know that BCG are actually working with Citadel? Surely BCG wouldn't risk their reputation, and they are actually a brilliant consultancy company. Well, interestingly, BCG actually got sued in 2020 by a company called NCR for engaging in acts of corporate sabotage. And here's that actual lawsuit between the Boston Consulting Group and the NCR Corporation. It says the counterclaims allege that by entering into an agreement with NCR's former chief operating officer and engaging in other acts of corporate sabotage, BCG breached its obligation to NCR. NCR asserts the following counterclaims. Number 1, breach of fiduciary duty. Number 2, aiding and abetting the breach of fiduciary duty. Number 3, breach of contract. And number 4, breach of the implied covenant of good faith and fair dealing. So as a bit of a too long didn't read, BCG and a new COO or Chief Operating Officer potentially placed there by Citadel or another hedge fund secretly collaborated to get him promoted to CEO, partly by criticising the current and sick CEO. And it says it seems like their goal was to gain influence at the company by having the CEO on their leash. Obviously, if BCG managed to get their insider appointed to CEO, they were basically free to work directly between the CEO of NCR, BCG, and Citadel directly. And Redliner has an excellent explanation of exactly how everybody gets paid in this circumstance, not just Citadel with their unrealised profits. He says that's their game plan, a hostile takeover by a large shareholder, force in a new CEO that will actually rank the company through bad business decisions while paying themselves and the other people that the CEO brings in large sums of cash. Meanwhile, the shareholder or that fund shorting the company takes out a massive short position and buys tons of put options and seller boxes the company. This way, they're assured there's no surprise from the management team, like a potential management buyout, in turning the company around. You also then hire consulting companies to siphon off cash for themselves while they're in on what's going on, and they don't actually do anything to turn the business around. So this way Citadel makes tons and tons of money from their unrealised short positions which are in profit, BCG siphons off tons and tons of cash from the company, and the CEO that they appoint into the company gets rich for themselves as well. And obviously this way you also have no loose ends because nobody's going to complain about getting rich. Sweptastic Fail says, hang on a second, is this how Citadel has done it for years? They use these consulting groups to infiltrate a company, get insider information, or give them bad information and bad business decisions, while Citadel meanwhile shorts the company to hell. Guys, be sure to let me know down in the comments below what you think about the insider collusion to short AMC and Gamestop. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.